Yo, hello guys. I'm gonna show you, as you can see on my screen, $150 to $1,000. I'm gonna show you how I did this. So stay tuned and watch this video. Okay, these are my trades. I'm gonna explain everything to you so you can know how you are gonna be making this money too. So before we get started, make sure you hit that red subscribe button and turn on the notification bell so you'll be notified when I drop a new video. And if you don't know, this is the only broker that offers synthetic indices, which consist of crash and boom. So click on the link at the description below to create an account with them. Okay, so we get started. You can see the trade on from $150 account to what's it called, $1,050 right now. Okay, and I'm still holding the trade. I will explain everything from the beginning to the end. So watch this. Starting from the 4-hour time frame, I took a position managing risk. You can see the lot size is 0.3 lot size. From this point, this is where I took my entry. You see right there, I took that trade with a lot size of 0.3 because the account was just $150, so I had to manage the risk. You can see the trade was actually a very perfect entry, combining price action and amazing strategy, which is consists of the MACD and the moving average. Let me show you my entry for this trade. Look at it. You can see as the moving average crossed above right here, the red moving average crossed above, I go in for a sell, and a stop loss should be above this moving average. So what happened, the market began to do what? To sell. So let me show you the indicators. Is a moving average 40, period 40, shift 0, method simple. Okay, let me make this more audible. Method simple and apply to close. Yep. So the style 2 pixel red, you click on. The next indicator is a MACD. Fast EMA is 12, slow EMA 26, and the MACD SMA is 9. Yeah, so apply to close as well. So you click for the main 2 pixel, the signal 2 pixel, you click done. So that's just the indicators you need for this strategy. So like I said before, you place a stop loss above the moving average. Yeah, you place a stop loss above the moving average, and as you can see, the stop loss was never touched. Yeah, since it's above the moving average. So look at it. You can place a stop loss above the moving average. That's just how you do, and then you leave the trade to make the money for you, and it has been selling. So when it got to this point, I saw it on about $180 profit. Yeah, so I saw it on about $180 profit, because look at the trade right here. This 0.33, it's on $200. So when I saw it on $180 profit, and this is what I watched. I check out the market and look at it. Look at the first. Okay, let me put it on 4 hours so it will be clear. This is, let me take these tools. Okay, good. So you see the entry right there, guys, on 4-hour time frame. Look at it. It has been selling. It's sold down to this level before I took another entry. So why did I take this other entry with big lot size? That is what I will explain to you right now. Otherwise, I would have been ending with $200 profit right now, but I took the risk to use big heavy lot size to get more money. Okay, I'll show you that. This is it. If you watch, I marked this out. You can see this red line that I marked out. Come in, guys. Okay, you can see this red line that I marked out. That is a resistance level. It was a previous support level that was broken. So it is the only support level right here, a previous resistance level that has become support level right now. So this is what I was watching out for as my stop loss, because I was leaving this trade to keep on selling. This is where I was watching at, that if the market can break through this previous resistance level, which is previous support level, which is now a resistance level, then I'm gonna be closing the trade right there. But seeing this, that it didn't break it, I had to observe and wait for it for a step, because the market came all the way down here, went up for a retest. I was supposed to get in again at this level, but I decided to wait. Then it moved up for a mighty move to the upside. Remember, guys, I always tell you that except the previous higher high, previous lower high is broken, that is when you can say, okay, the downtrend structure has been broken. Take for instance this. Let me show you in a. Okay, the market came down, went up for a retest, came down, another retest again, continuously. You can see. So this is how this market moved. These are lower highs, lower low, lower highs and lower lows. You see, I know it's kind of rough, but just bear with me. Lower highs, lower lows. So you can see right here, this lower low at this point was touched. It wasn't broken. So unless this market breaks through this previous lower high, that's when the downtrend structure is broken. And seeing the movement of the market, it wasn't broken, it was still on a downtrend. You see, came down to this level, went up. This same zone, which is for the previous lower low, wasn't broken. So this was actually my target for stop loss. So if eventually any candle closes above that level, then I'm gonna close it as close the trade. After all, I'm still on profit, so it's just to risk some and to get more profit. So as soon as I saw that it the market was unable to break through that level, and from the 15-minute time frame, I saw the market giving nice structures for a sell, as well as the 1 hour time frame. Look at it right here. Remember the line that I set this level as the previous lower low, which the market is gone on. That's where I set my stop loss, that if the market breaks through that level, that will be a sell. So since the market is struggling at this level, it means that okay, it's trying to come back, it's unable to break through that level. So this was actually a very good opportunity for me to go short on this market. So after seeing this, let me clear this up, guys. Okay, after seeing this very long bearish engulfing candle, you see this long bearish engulfing candle, I knew that the market was going to sell, reverse to the downside, and then the market went up again for a retest, unable to break through. So I decided to enter this trade with very huge lot size, risking the profit, risking the. Remember, I said I was having $180 profit, risking the profit. I just wanted to risk just the profit. That's why I entered with amazing big lot size, risking the profit, and the deposit, the balance would be intact. So, and a stop loss should be at this level. This was actually my plan for the trade that I took. So if eventually I lost more than the 180, lost up to 180, I'm going to close those huge lot size trades, and then let the first one keep on running. Then my balance will be intact. So that's how you do good risk management. So I was risking only the profit, not my equity. So look at it, not my balance, sorry. Look at it, the market is now forming a downtrend since it has come from an upside. Let me clear this. The market came from the up, forming a lower low, a lower high and lower low movement. So you can see it's still selling. So where is the target for this trade? The first take profit level for this trade, it's right here at this previous support level. Sorry, previous resistance level that is now support. So this first support level is the first TP for this trade. You see, the first TP for this trade is right here, this line. Then if it breaks through this, then nothing is gonna stop it from getting to this previous low. You see that, guys? But I'm not gonna be holding the big positions up to that level because it's a kind of risky. Yeah, it's a kind of risky. So since I've made some funds from that, I'm gonna close those ones as soon as it gets to this first take profit level. Then if eventually I can close it anytime as soon as I see some kind of bullish reversals, structures or pattern, I'm going to close that trade. But the main trade the first trade, which is for the 0.3 loss side, is gonna wait till the downside. So guys, you can still enter this trade. I'm gonna be posting this video right away. You can still enter for the step index so that you can still get some stuff from it, get some funds from it. Yeah, you can still enter from step index, and then you set your stop loss. You can go in for the trade and set your stop loss at this level, which is the previous high, so that as the previous lower high is broken, then that will be your stop loss. But I'm actually expecting step index to go short for it. Then checking from the 4-hour time frame, we see guys, we're expecting this candle to move to the downside. You can see it's like a retest of the market. So the daily time frame, still expecting it to go down. So we are actually trading in direction of the trend, because the trend is a downtrend, it's a bearish trend. So we are trading in direction of the trend. The trend is our friend right here. We're following the trend. So this is how we do things on Forex success, combining the indicators and the the price action to make money. Look at it from the indicators right now. The the moving average from the 15-minute time frame is actually crossing below the chart. The 5-minute time frame has already crossed above the chart for a sell and MACD below the zero level. So this is actually a very good time to place a sell for step in there. So we can see the trader confirmed that it's gonna go short. So that's it guys. Make sure you subscribe to this channel for success. That's what we do right here, and check out the link at the description below to create an account on Deriv using the link guys. Thank you for watching. We got a Telegram group, the link is also at the description below. Join us there, we're one big family. Thank you very much.